Hey everyone, welcome to this explainer. I am so glad you're tuning in today because we're diving into something that is literally reshaping the world as we speak. We are standing on the edge of what a lot of experts are calling a once-in-a-generation shift in global finance. Our financial systems, that invisible plumbing that dictates how we buy, sell, save, and interact with the global economy, are entering a totally new era, driven entirely by digital assets and blockchain tech. The transition is happening right now, and honestly, the stakes for who takes the lead couldn't be higher.
So that brings us to one seriously gripping question. What if the United States actually led this next financial era? Today, we're exploring a very specific vision laid out by Coinbase. They argue that the U.S. is facing this unique, massive window of opportunity to take charge of the digital asset revolution. But that window isn't going to stay open forever. We're going to break down their arguments, take a look at what this new system actually looks like, and figure out exactly what it all means for businesses, investors, and just everyday Americans.
To do that, here's our agenda for today. First, the digital finance frontier. Second, what is next-gen finance? Third, why U.S. leadership matters. And fourth, balancing benefits and risks.
All right, let's jump right into Section 1, the digital finance frontier.
Okay, so Coinbase makes this really compelling argument right out of the gate. They say, just as the internet transformed communication, blockchain has the potential to transform finance. And it's a great analogy to ground us, right? Think back to the early days of the internet. Before it came along, communication was super localized, it was slow, it was expensive. The internet democratized all that information and made communication instant and completely borderless. Well, according to the sources we're looking at today, blockchain technology is positioned to do the exact same thing, just for money and value. It's basically about upgrading this clunky legacy system to a fully digital global standard.
Moving right along to Section 2, what is next-gen finance? The absolute bedrock of all this, of course, is blockchain. Now, most of us know the basics by now. Rather than relying on legacy banks or traditional networks acting as middlemen, this distributed ledger lets money and assets move directly across the internet. It's fast, it's secure, and it's totally transparent. It's the foundational tech that makes things like Bitcoin and Ethereum possible in the first place, establishing this verifiable network of trust without needing some central authority to sign off on every single transaction.
But here's the catch. If you want everyday finance to actually function smoothly, you really want to avoid the wild price swings we've seen with early cryptocurrencies. And that is exactly where the stablecoin comes in. It's a regulated digital asset designed to maintain a stable value, usually pegged one-to-one with a major fiat currency, like the US dollar. They are basically the essential bridge bringing reliable utility to this whole fast-moving landscape, making sure everyday commerce, payroll, and remittances can actually flow smoothly on the blockchain.
When you put the two side by side, the contrast is pretty wild. Traditional finance leans so heavily on these legacy networks with strict operating hours. I mean, sometimes it is literally faster to put physical cash in a briefcase and fly it across an ocean than to wire it internationally. Next-gen finance, on the other hand, is 24/7. Supporters really highlight how an internet-based system speeds up payments, slashes operational costs, and massively improves access for people who might be totally locked out of the traditional banking system.
Which brings us to Section 3, why U.S. leadership matters. According to Coinbase, the United States currently holds all the right cards to lead this global digital economy. The talent is already here, that culture of innovation is deeply rooted, and the capital is just waiting to be deployed. But they issue a pretty massive warning here. While the U.S. has all these advantages, a lack of clear regulations actually risks pushing all of that innovation and the investment that goes with it overseas. Because if creators and businesses don't know what the rules of the road are, they're naturally going to pack up and migrate to countries that actually give them that regulatory clarity. Think about the ripple effect if the U.S. does establish clear, balanced rules for digital assets. Regulatory clarity attracts a huge wave of new businesses and capital, which directly fuels high-paying tech jobs. Plus, and this is a really interesting point, by actively embracing regulated stablecoins, the U.S. could actually cement the global dominance of the dollar by making it the standard currency of the digital world. Ultimately, it encourages responsible innovation while making sure consumers are actually protected from bad actors. For Coinbase, securing this leadership right now is the total linchpin for keeping the U.S. competitive down the road.
And finally, Section 4, balancing benefits and risks. Let's look at this balancing act, because the potential benefits are undeniably awesome. We're talking faster payments, way lower costs, massive financial inclusion for the unbanked, and totally transparent systems. But we have to weigh those against some pretty harsh realities. Crypto markets can be incredibly volatile. Security risks, outright scams, and super sophisticated cyber attacks are still very real issues. And of course, governments are highly focused on anti-money laundering rules and making sure the broader financial system stays stable. It's a very delicate tightrope to walk.
Because of this inherent tension, most experts seem to land on a solid consensus. Innovation absolutely has to be supported, but right alongside strong regulations. This is the big dilemma policymakers are facing today. They can't just ban the tech without falling massively behind on the global stage, but they also can't just allow this Wild West scenario that puts the public at risk. They have to find that sweet spot, moving fast and supporting tech while fiercely protecting public trust and financial security.
So why does all of this matter to you and me? Well, because this macro policy debate happening right now in government connects directly to your own wallet. The future of finance is actively being shaped as we speak. The decisions being made by policymakers today are going to heavily influence how you save your wealth, how you invest for your future, and how you send money to your family for decades to come. This isn't just a tech company issue. This is the literal foundation of our daily financial lives.
Just a quick heads up before we finish out, per our source material, this explainer is strictly for educational and informational purposes only. It shouldn't be considered financial or investment advice, so always do your own thorough research before making any financial decisions.
Which leaves us with one final, incredibly provocative question to think about. When we look at this immense potential of the digital finance frontier, the undeniable need for clear rules, and this global race to capture the innovation, who is going to write the rules for the future of your money? Is the United States going to step up to lead, or will that leadership shift somewhere else entirely? It's a fascinating situation to watch unfold, and one that every single one of us is going to feel the impact of. Thank you so much for hanging out with me to explore this today. Keep learning, keep questioning, and I will see you in the next explainer.